When you buy a stock, you're purchasing a small ownership in a company. For example, if you buy stock in Apple, it means you own a tiny part of Apple. Now, if the company does well and makes profit, you can make money. But if the company faces problems or loses money, you might lose your money too. Mutual funds works a little differently. Think of them as a basket filled with various stocks and sometimes even bonds. So instead of investing all your money into just one company like Apple from our previous example, mutual funds spreads it across multiple companies. Now, although the investment decisions such as which company to invest in and how much to invest in are made by a team of professionals or fund managers. By investing your money in multiple companies, mutual funds allows you to benefit even if one or two companies don't do well. Hence, it is clearly established that mutual funds usually involve lower risks as compared to investing in stocks. But lower risks equals steady returns. So, should you invest in mutual funds or stocks? Hello and welcome to Alice Blue, where we simplify everything you need to know about investing, trading, and personal finance one step deeper. While investing, the most crucial element is to be aware of the returns and the risks involved. To check the returns, let's compare the data for the past 10 years. This is the top mutual funds over the last 10 years. And as you can see, the returns have been steady but not very high. Now take a look at the top stocks over the same period. We can clearly see that the stocks have higher returns as compared to mutual funds. Keep in mind that we are looking at the very best performers, the winners, not the losers. So if you had randomly bought the stocks of 100 companies, most wouldn't have been able to return this 75%. Diversification can help you with minimizing your risks. However, it does not guarantee better returns. But what you can do is stay informed and take calculated risks. For example, if you invest in 5 companies and 2 of them do really well, their profits can help you cover the losses from the other 3 companies. Mutual fund, on the other hand, likes to play it safe by investing in well-known companies or the blue-chip companies like Reliance, HDFC, or Infosys. Now, this is because if anything goes wrong, it will not only affect you, but it will affect the thousands of other people who invested in that particular mutual fund as well. Now, this way, you may not suffer any major losses, but you will not encounter any large profits either. Our next aspect is the level of control or freedom of investment. Which reminds me, if you want to stay in control of your financial knowledge, make sure to subscribe to Alice Blue's YouTube channel. We regularly post content that will help make informed decisions and manage your investments better. With stocks, you have the freedom to choose which companies to invest in and when to buy or sell their stock. This gives you full control over your investment, but it also means that you are responsible for all the decisions that you make. With great power comes great responsibility. Remember, you will need to constantly stay informed about the companies you invest in and the market in general. However, this requires a lot of time and effort, which might not suit everyone. Hence, most investors tend to hire professionals like financial advisors to minimize their risks and maximize their returns. Mutual funds, as we discussed before, although gives you less control over where your money goes, but because these investment decisions are made by professionals, you do become free from having to make day-to-day decisions about what to do with your money. Ultimately, the right choice between investing in stocks and mutual funds depend on your individual financial goals and risk appetite. If you would like to start investing in mutual funds, make sure to learn more about how to avoid risks in mutual funds. You can check out this video for more information.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.